Namaskar and good morning to all of you. Today we shall talk about Vakrangee Limited. The investors of Vakrangee Limited are sometimes very highly expectant lot, sometimes highly disappointed lot, and highly afraid what the company will do next and what the market will do next. So this is the problem with companies like Vakrangee, Manpasand, etc. Though they were very good companies in the past, how they are going at present and what will be their future is anybody's guess. That's how the management is steering the company at present. Now they have declared the Q1 results. Let us see the Q1 results. The total income for Q1 stands at 1027 crores against 1304 crores, a fall of 22%. 1304 crores was last year, same quarter. 1027 crores Q1 this quarter, a fall of 22%. 22% fall was expected because it is going through a upgradation, churning process, so many things. Now, EBITDA stood at 25 crores in this quarter compared to 266 crores in the corresponding quarter of last year. This is unexpected. Now, you can't have a fall of 90% in EBITDA. When the revenue falls 22%, EBITDA also may fall 22%, maybe 30%. But a fall of 90% is disappointing. Profit after tax stands at 13 crores in the current quarter as against 168 crores in the same quarter previous year. Here again, the fall is over 90%, 92% actually. Disappointing, so to say. Earnings per share, still more disappointing. It is on a face value of rupees 1, it stands at 0.12 against 1.59 in same quarter last year. So the revenue downfall was somewhat expected, but definitely not a EBITDA or profit downfall by over 90%. What the company is doing, we'll have to see. The market price at present is 63, but who knows what will be the price at the end of the next week. Price earning based on the current EPS is 131. It's totally unexpected. Now, the company says about its strategy update. It says, focus on upgradation to next gen Vakrangee Kendra model. Now, the company says the focus now will be on upgradation, conversion and churning of all the 45,000 outlets to the next generation Vakrangee Kendras, silver or gold model with standardized look and feel. I don't know why company is doing this. It could have done a simpler thing. Silver or gold model in which the franchisee has to spend 10 lakhs for silver and 20 lakhs for gold. Does it yield that much revenue which can cater to both the franchisees and also the company? I don't know. And over and above that, the company also is going to incur a lot of capex on these Kendras for ATMs, etc. So the conversion upgrade churn will be done in a gradual manner throughout the year almost. Now earlier they said within a quarter, but now they say within a year, within this year. It will be standardization upgradation for all the 45,000 plus Kendra outlets. It is confident of the long-term target of 75,000 next-gen Kendras by 2020. Okay. And now the update on current progress. Now, first 50 next-gen Kendras in the Mumbai metropolitan region will be launched by shortly. Already 4,000 plus outlets are under upgradation on a pan-India basis, covering 2,548 postal codes and 380 districts. Expected to launch 4,000 plus outlets before Diwali, that is October. Now, if you are going to launch 4,000 in October, when will you launch 42,000? I don't know. The progress is very tardy, very slow. Out of these 4,000 outlets, more than 3,000 are from Tier 5 and Tier 6 cities. This is another thing. I don't understand why in Tier 5 and Tier 6 cities, why do you need a gold Kendra? Why do you need a silver Kendra? An ordinary Kendra will do. Will there be enough revenue to cater to the franchisee and also to the company? In other words, to the investors. In Tier 5 and Tier 6 cities. Tier 1 city is okay, but Tier 2, Tier 3 itself is doubtful. Tier 5 and Tier 6, I don't know what it is. Pan-India marketing planned over the next few months to increase the brand awareness. Brand awareness is okay when there are no Kendras of that brand. What is the purpose of this brand awareness? Still, okay, let them go through it. Impact on profitability. Franchisee has to incur capex of 10 lakhs for silver and up to about 20 lakhs for the gold Kendras. Revenue sharing ratio is not stated, but it will certainly impact profitability of the company. That was expected, but how much? Now that is what the company should tell us. Now earlier it may be say 7:3 in favor of the company and the franchisee, but now it may be 5:5 or 4:6, whatever. The company has to tell where it stands. Now this time it has fallen by 90%, 92% has fallen profitability. Will that be like that in the future also? We don't know. During the current financial year, the entire focus will be on upgradation. Hence the financials for the current year would be materially impacted. So they have themselves stated it will be materially impacted, but by how much? Will it be by 92% as in this quarter? God knows. To incur capex on the ATM business. ATMs are said to be mandatory. Why they are mandatory? In Tier 5 and Tier 6 cities, when there are so many ATMs of the banks, why somebody needs a Vakrangee Kendra ATM and it will be inside the Kendra, somebody has to go in. The bank's ATMs are easy to walk in. Now, Vakrangee Kendra ATM is not so easy to walk in. I think so. So how it is more, it says it will be very lucrative compared to current return rates. How? I don't know. We'll have to wait and see. Now SEBI has ordered that the promoters should offer shares buyback to general public also. That actually it is a case of June 2013, but SEBI's order is dated 9th August 2018. What happened in 2013, that is having repercussion in 2018. I am not going much into it until the position becomes clear. But if company or promoter group has to ask people, many people will definitely surrender their shares as things stand. Now, update on next gen Vakrangee Kendra model. So the boutiques of services offered by the Kendras has been increasing and resulting in exclusive store format. That's all good. See, you have done a lot of work in getting so many services under one roof, but spending much more than what it can afford on capex, both by the franchisee and by the company, is, I think, unwise. Key mandatory features are ATM. Why ATM should be mandatory? Wherever it is profitable, you put there. Where it is not profitable, don't put there. CCTV. Okay, CCTV, what it will do? Okay, CCTV has become even in houses. Okay, digital signature and pin pad device for all kinds of payments made. Company is in the process of upgrading all the franchises to silver and gold model. Standardized look, brand feeling. The portfolio of the key licensees and partnerships were built over last 20 years. What was built over last 20 years, now you are capitalizing on that. Okay, but if they are ready, let them go for it. If they are not ready, if they don't feel that the revenue is enough, leave them. I don't know why companies should be compelling them. Have built a strong bouquet of products and services over 2 decades. That's true. Interoperative banking, okay. Pioneer in Aadhaar-based biometric-enabled banking, field level hierarchy to the block level, more than 1,150 district and block area managers, continuous hand-holding and support to franchisee, robust store economics. This is where we are still not very convinced, Mr. Nandwana. You say robust store economics. But what is that robust store economics? Is it 0.13 paise per rupee of equity? How will it be in future? So some sort of indication should be given. After, see, you say 1 year, there will be profitability problems. But what about the period after 1 year at least? We don't know. Scale leading to emerge as a partner of choice. Now, the Vakrangee was a very profitable company. In fact, in December, November, something like that, many TV channels were running great eulogies on Vakrangee. How it is so profitable in so short a time, on a simple business model. Now the simple business model is being complicated, where something better than a kirana shop is sufficient. Probably you are creating a big jewelry shop like structure. Looks like that. Now your Kendra looks like a Kalyan Jewelries are much bigger, DMart or some such shop with so much of paraphernalia. No, but it is situated adjacent to grocery shops and kirana shops. So, no, see, we want more and more people to be entering your shop easily and coming out of it. If you put only glass structures, the glass structures may be broken very easily when a number of customers come in, and we want more customers to come in. This is for ordinary people. That's what Ms. Nandwana is probably not realizing. I wish, I'm not saying that Nandwana has not made any, or the board has not made any calculations or whatever, but board is not telling about future profitability, not giving any indication about the future profitability. Q1 profits are dismal, unsatisfactory. Now, how will it be in the quarters to come as upgradation progresses? If as upgradation progresses, if profits are to come down even below this level, I do not know what the customers, what the investors are in for. Now, you are giving 25 paise per share dividend, but you are earning just 13 paise per share. Earning 13 paise, giving dividend 25, okay, we are happy to that extent, but it doesn't make sense. You must earn at least that much. We expect that you earn 1 rupee for 1 rupee minimum. Kindly enlighten us on many of the doubts that people are having. Mr. Nandwana should come forward. So he should, if necessary, rework. The gold model may be unnecessary. In my opinion, gold model may be unnecessary. Silver model may be more than enough. If franchisees are to be safe, profitable, if company is to be profitable, if investors like us are to be profitable, if more and more customers are to enter your Kendra, you should be more hospitable to them. You should not look like reserved for 5-star people. That's what I personally feel. Thanks for listening. Give your ideas to Ms. Nandwana and to me also. I'll come up before you with another video next time.